So what are your thoughts on uranium and how are you and your clients looking to play it?
I would probably align myself with the second guess that you were explaining because I think that things have changed from a supply perspective. We saw the CAS news, I guess 10 days ago. CCJ didn't come out with, I guess, as much of a dire report that people wanted. Canada last week, and that created a bit of a sell off. But it's natural to have sell offs in any rally, and so that's probably, we have 17 or 18% cash in our portfolio right now for a reason. We want to be ready to pounce on pullbacks in things that we like. We like uranium as a subsector right now because it's the only one that's got momentum, in my opinion, in terms of equities. And it's
Right.
the only one that's got the ability to raise cash. I mean, look at what happened in Q4. Uranium Royalty, UROY, raised a bunch of money. Fission raised a bunch of money. Then Denison raised a bunch of money. Like these guys all raised money at a great time. But then look at the charts of these stocks after that. They absorbed that problem, meaning a financing, right? A 10 to 12% haircut, and then just moved on. Like it was, if that was a gold or silver stock, it would have taken them 4 to 8 weeks to absorb that. And it seemed like they absorbed this within days. So, I mean, that's when you see something like that, you have to kind of look at that and say, that's different. So we are keeping our eyes on a lot of juniors in the space because, I pointed out on numerous podcasts that spot was running last year, but the equities didn't catch up, right? So we were putting our money where our mouth was and buying stuff in August, September. We bought Forum Energy at 4 cents and 5 cents, which is FDCFF. It's trading at 11 now. Because Rick's got 40 years of experience in uranium. And so, like, are they drilling at the current moment? No. Is that a negative? It might be if you're a short-term trader, because there's not going to be that kind of news flow that you want necessarily in February. But when you look out a couple of months, they are going to be drilling their new discovery from September, Thelon Basin. And so basically, it's like if you can wait a few months, you're going to get results, and they're probably going to be decent as follow-up to what they already have done. Standard Uranium had good news this week and last week. They acquired, I think, 4 or 5 new properties, STTDF, and really changed their business model since I bought them 2 years ago. So they're looking at acquiring a bunch of different projects right now and then monetizing those at higher prices, as well as drilling. So they've got, a fully funded drill program for this year. That stock looks like it's primed for a breakout from arguably a low base. And then we've really just started to look at a couple of others. Platinex is one that I just started to buy last year, PANXF, because they're going to be doing a spinoff of Green Canada, which is their uranium piece for shareholders. And so whenever I can get free shares of anything, I'm interested. Again, the share price is like at $1. It's trading at 2.5 cents. So when you look at something like that and say, I can get something for free and it's trading at 2.5 cents, I mean, it's got a very low risk profile is my point. And so we as value managers, we're cheap. We want to buy things cheaply and exit, at higher prices.